There we go. It would actually help if I unmuted myself. Welcome on back to the jobs report day. Now, obviously, markets are highly anticipating this jobs report, and we're going to be looking for the difference between the establishment survey and the household survey. What'll be really interesting here is that lately the household survey has been more accurate, and then the establishment survey, which is the headline survey, comes in pretty high, and then they revise the establishment down to the household. People have started to recognize that the number comes in high a lot, and then it gets revised down. But nonetheless, the market tends to rally when it comes in high. And right now, markets seem to be positioned for a beat on non-farm payrolls, looking for 150,000 versus the 142 of the prior read. The estimates are quite frankly all over the place, and a lot of people are saying that the seasonal adjustments in this one are the big tell. So, you know, like, maybe I shouldn't say the big tell, but they're sort of the wild card, I guess would be the better way to put it. The reason is you've got estimates literally all over the place. There is Citigroup, who thinks that we're going to have 70,000 jobs. So it's kind of like this crazy range, right? Let's write down some of this this range. So wild range of estimates, we'll say. And I'm going to put, this is likely due to estimates for seasonal adjustments varying heavily. Okay, and then you have Citi at 70K jobs. You have Thomson Simons at an expectation of 220K jobs. So this is a huge range, right? And then the current average estimate is 145.5, and the median estimate is 150K. And then the prior was 142. Now, keep in mind, we had strong jolts, which also could be because of seasonal factors. We had, you know, large revisions off of prior establishment reads. We had a strong ADP report. You know, how much the ADP and jobs report actually align, who knows? Guess we'll find out. Usually not very, but that's also because you could get this huge beat. I mean, ADP came in at like, what was it, the 140 or something like that? You get this giant beat today at 200K, and it just wouldn't be a surprise in terms of being off from the ADP report. So I would expect that if we have a strong jobs report here, you could continue to see a sell-off in treasuries, which you know, would drive yields higher. You would also potentially unprice some more of these recession fears. So I maintain this belief that really jobs are a lagging indicator, and really it's going to be up to what companies decide to do with Q3, Q4 as to whether or not we're going to see layoffs or not, and if we are heading into a recession, or quite frankly maybe already are in one. Who knows? So we'll see. We will find out together. Presently, markets are very optimistic. It looks like after the port strike, you got a nice jump here in the Qs. You're up about 45 basis points right now. Yes, commodity Steve, you are right. Oil's up about 10%. You did have the port strike end, which is good. And then today at 11:59 p.m., we've got coupon code JOBS expiring, and we'll have another price increase. This is going to be one of the larger price increases, I'm told. So buckle up if you want to lock in the best price. Make sure to do that before 11:59 p.m. tonight. And if you have questions or looking for bundles or whatever, email us at staff@meetkevin.com if you don't find a bundle you like on the webpage. Okay, here it comes. We are just now about 15 seconds away. And remember, we have to go into the actual jobs report to figure out what the household survey is. And we're looking for 150, and we got, watch it be 200. And we got 254,000. What? Dude, it's like, holy crap. It's so, oh my, I'll look at this household survey, but let's listen. What kind of number is that?
254,000 significantly better than 150 expected, and an upward revision to last month from 142,000 to 159,000, which means the 2-month revision now is a little over 70,000. If we look at the unemployment rate.
Yeah, they revised up unemployment rate down to 4.1, average hourly earnings 0.4, average hourly earnings year over year 4%. This is a really good report. Labor force participation stable, and I mean, we'll see. I mean, even if you revise down off of this is pretty good.
Average hourly earnings month over month, better than expected, up 0.4%, which equals where we have been in May. You have to go back to the beginning of the year, January, when we were up 0.5%. Now, if we look at average hourly earnings on a year-over-year basis, this number also much better than expected, 4%. That equals where we were in May. You have to go to March to find a higher number at 4.1. The work week, 34.2, which makes it actually a 10th less than expected and a 10th less than the rearview mirror. To find a lower work week, you have to go back a long way. You're going to have to go all the way back to 34.3.
The household survey was also really good. You had negative 281,000 employed, and then you had unemployed, and then you gained employment by 430,000. Both establishment and household really good, even if they revised this crap down, really good. Yeah, right before the election.
Higher number at 62.8. And finally, the underemployment rate. The actual employment rate of 4.1 is called U3. U6 is the underemployment rate, and that has been moving higher. It was at 7.9 our last look, which was the highest since October of 21. And it came down 0.2 to 7.7, which would equate it to the lowest level since June of this year. So yields have shot up. We're at now 394, 395 in a 10-year. We see 385 in a 2-year. These are big, smart reversals. Today now marks the third consecutive session that Treasury yields have climbed over the previous day's high yield, or if you want to look at it in terms of low prices, which means we're building momentum to higher yields. And that's important considering we settled the 10-year last week, get this, at 375. So we've seen some significant moves. And on the short end, we settled a 2-year last week at 356. So it's up 30 basis points from last week.
That's true. This is crazy. These are some wild numbers. Let's look at this. So yeah, these are obviously not recessionary numbers, even if you go into revising these. So let's make a note of that. Even with revisions, this is not recessionary. So let's see here. 4.1. You're going to undo the SOM rule soon. And let's see here. So the threshold for recession may get moved up from 0.5 to higher. Let's see here. Employment continued to trend up in food, service, and drinking places. Let's take a peek here. Healthcare, government, social assistance, construction. This new release presents statistics from 2 monthly surveys. Household survey measures the labor force. Yep, we already went through that. And then, of course, the establishment survey, which we went through. Okay, let's see here. Both the unemployment rate at 4.1 and the number of unemployed people at 6.8 people, little change. This did go down in the household survey, right? Minus 281K. In the, if I read that correctly, we'll pull it up again in just a moment. Actually, I have it right here. Change from August 2024. Yeah, 281,000. Yep, no, that's correct. Month over month. These measures are higher than a year earlier. That's true. Among the major work groups, these are the unemployment rates for various different races. Number of people jobless less than 5 weeks decreased. Now that's interesting. Jobless less than 5 weeks decreased. Number of long-term employed was a little changed. Okay, so that's actually really important right here. So this right here, very, very, very important. This is a big deal because you don't want to see that level go up. The 27 weeks unemployed is a number you want stable to declining, right? And that's what you got here. Labor force participation, little change. That's fine. Number of people employed part-time for economic reasons, little changed. Okay. Measure is up from 4.1 million a year earlier. These individuals would have preferred full-time employment, but were looking for part-time because their hours had been reduced or they were unable to find full-time jobs. Number of people not in the labor force who currently want a job at 5.7 million, changed little in September. These individuals were not counted as unemployed because they were not actively looking for work. That's fine. Let's see here. Marginally attached to the labor force did increase 204K, but I mean, I think that's offset by some of the other numbers here. Changed little for discouraged, changed little. Healthcare added 45K, below the average. Yeah, healthcare would have been slowing. I'd been noticing that too. But this is pretty wild. Look at that. This is really remarkable because the restaurant industry has really seen a big slowdown. You know, restaurants have nearly been in recession with performance. So this hiring is impressive. Very interesting. Okay. We'll have to look at some of the non-seasonally adjusted numbers too, just to see how large these seasonal adjustments were. Employment in government continued to go up, though slightly below average. Construction employment up. Little change in other industries like professional business services. Average hourly earnings up 0.4. Okay, now let's go to... I'm going to grab household I already looked at. Now I'm going to grab the... I want to see if I can get the unseasonally adjusted. Let's do it over here. Seasonal. Let's see here. Employed and unemployed not seasonally adjusted. I'd be curious to see how large these numbers are. All right, here we go. We'll do it here. So we are looking for the employed. This is the year over. These are all year over year. That's less ideal. I'd like to have not seasonally adjusted. Multiple job holder, not seasonally adjusted. Let's try these here. These are all the not seasonally adjusted ones. I don't think they actually give us a month-over-month figure on any of them. Oh, that's lame. I mean, I suppose I could go back into the last BLS report, but that's going to take a little bit more effort. Unemployed person by industry. This is, you know, total employed basically right here, 16 or over. This is the unseasonally adjusted number. So you actually have year over growth without the seasonal adjustment here. Now let's try to get the employment situation report from last time. So that would be the beginning of September. I don't actually know how easy that's going to be to get because they kind of replace it with the last one. Archive news releases. Here we go. Employment situation, 2024, August employment situation. Got it. And... oh, do they just slap it all in one? That's crazy. Yeah, they do. Okay, fine. So, by occupation, not seasonally adjusted. Here's the same chart. There we go, August. So, August 2024, this is unseasonally adjusted, was 161,348. Oh, it still went up. Look at that. Even, well, I mean, these are the not seasonally adjusteds. 046. Yeah, even without the seasonal adjustment, you had almost a 700,000 move. That's crazy. Is that right? Employed. I had to write this down. Hold on, let's write this down together. That's wild. Okay, let me find that again. Okay. Yeah, let's do this. So, not seasonally adjusted, August employed is 161,348. And then not seasonally adjusted, we'll do August. Unemployed. Oops. Unemployed. This number is 7,415. Okay. And then we're going to do it again. But we're going to go with September. September. There we go. Unemployed. And let's update those numbers to September. Here we go. Unemployed. Unemployed. Wow, that's a big drop. Look at that. 6, 5, 2, 4. And then this unseasonally adjusted number here, 7. That is the one. Oops, one sec. Yeah, that's September. There we go. 162. 162,046. Interesting. Look at this. So this is... That's pretty good. Even not seasonally adjusted, you have... What is this? Let's do the math on this. 161,348. 162,046. It's 698,000 plus 698K. And then those unemployed, that came down massively. A lot of people came off unemployment. 891. Wow. Yeah, that's pretty good. Very good. Even outside seasonal adjustments. As in, so, establishment report, great. Household report, great. Then you have the non-seasonally adjusted employment, great. And then the non-seasonally adjusted unemployment, oops, great. And then the only spot for concern may, although not really a big deal per Powell, be the 0.4% wage gains month over month. Inflationary concerns. Okay, so this should fully unprice a 50 next time. Obviously, there's another employment report. Yes, CPI and one more jobs report before Fed meeting, but this level of employment should call for 25 BP of cuts or nothing. That's really interesting. Okay, so how are markets reacting to that? Because I think that's pretty... Oh, why is Rick yelling?
But here's the thing, Rick. If you have an increase in the price level, that does not mean you have inflation. It means you had an increase in the price level. Yeah. When you have the number of workers...
Let's go with that. Let's go with that. That's fine with me. Forget inflation. Toss it out. Okay, America, here's what we're saying. The prices are going to be going up. Put any name on it you want.
Rick, if you want to have a semantic argument, you can have a semantic argument, but a rise in the price level is not inflation.
Semantics. Prices are going to be going up.
You're in good shape because the last thing economics is an actual science. Wendy, it's dismal if it is, but you get Nobel laureates that win in polar opposite theories.
Joe, first of all, your hand is in my shot when you do that, okay? I'm insulted.
Okay, I'm sorry. Wendy,
here, buddy. Can't quite reach.
Wendy, weigh in.
So the Fed does not need to set monetary policy in advance of, the ghost of possible inflation on the horizon.
I always love it when Rick freaks out. I think it's hilarious. Okay. Wow. Okay. So, very interesting. I think there's a chance this also prices in more Kamala frankly. Probably prices in greater chance of Harris. Which, let's take a look at that. Let's take a look at some of the market reaction. Yeah, so the Qs are up, obviously, on this. Then you have... oh, look at that. Palantir's like $40 now. Then you've got... See, Bitcoin initially went up on this, but then retraced. I wonder if it's because they price in less of a Trump, right? Stocks rallied. Bitcoin initially rallied, but then moved back down. Maybe as Trump is unpriced. Possibly. Let me look at like Poly Market. The betting odds. Still has Kamala Harris 1 point ahead, though they're like a dead no, she's only like 3 basis points ahead. Or 30 basis points rather. Yeah, look how tight this has gotten. Trump, he lost a lead there for a moment after the debate, I think. And it's been pretty tight there. And then let me go to Predict It to see if Predict It is moving at all. Where is it? Yeah, I mean, went down a penny. I don't think you can really pinpoint that in the betting markets, though. So it might just be Bitcoin at this point before you have the betting market. Wow. Okay. Jerome Powell's gonna get his statue. Traders shred bets on 50 basis point cuts. Yeah, well, duh. Okay, let me look at Nick T. Using a 3-month average, payroll growth for August was revised up, and payroll growth in September was up. So you have this uptick. 3-month average non-farm payroll growth. This is kind of what you're looking at right now. Oops. This is a good chart from Nick. And this is probably consistent, you know, around 180K is typically consistent with normal. That's so very interesting. Somebody says, what's going on with Spirit Airlines? Well, Spirit Airlines is potentially declaring bankruptcy. So if you take a peek over here, you can see Spirit Airlines is down 32%. Okay. Interesting. Okay. Let me see what else here. Okay. What about... Oh, the USD to Japanese dollars jumping. Okay, I want to get interest rate probabilities. Okay, we are now at just a 6% chance of a 50 in the next meeting. Sorry, it's 8.9% now. It literally just updated in front of my eyes. Okay, markets now only pricing an 8.9% chance of a 50 BP cut. Wow, that is a crazy flip. Let's see here. Gold slides. That would make sense. Yeah, gold's down 0.5%. Okay. Labor data looks super strong across the board. Yeah. How's the 2-year, by the way? Oh, wow. The 2-year is actually up substantially more than the 10. Oh, this is going to put you right back into inversion, isn't it? I think the 10 too. I think we might only be 9 basis points on inverted right now. 8. Whoa. That's crazy. It plummeted. That's wild. Only 8 basis points uninverted. Remember, danger zone is 50 to 90 IMO. All right, that's my opinion. That's just wild. Okay. All right. Let's see here. Okay, I'm trying to see what the rest of the suits are saying. This is crazy. It just, what's weird is it doesn't feel like this aligns with like what you're actually seeing in earnings. You know, I don't want to sound jaded. You know, that's not my point here. But like, am I crazy? I'm gonna say that. Am I crazy to think this jobs report doesn't seem like it aligns with what companies are actually reporting? It's odd. All right. So, U.S. employment report. Let's see here. This may, let's see here. Oh, it also makes you wonder. So, did J Pound know? So, did J Pound know the data? Probably. Question now for rates market. Okay, yeah, we talked about that. Gold is sliding. Markets may be underestimating the economy. Noticeable delay in the reaction. No, it's okay. Bit of a data looks super strong across the board. Low unemployment rate. Very spicy. Let's see here. Curve flattener. In terms of where cuts were made, they include temporary help in motor vehicle services. Oh, is that true? And then you do wonder if temporary help is being affected by gig work. Okay, so let's go temp. How can I find temp? Let's find out. Temporary? No. It's not in the main release. Is it in the household? Temporary job. Reasons for unemployment. Job losers and persons who completed temporary jobs. It's a big number. Oh, wait, hold on. September. Change from August to September. Oh, okay. Oh, okay. Oh, no, never mind. Temp workers. Reasons for unemployment. No, that was actually down too. So why did these people say that there were cuts in job workers or temporary workers? Class and part-time. Oh, here we go. Okay, so it's probably in here. August to September. Part-time for economic reasons. That was actually reported down. Part-time for non-economic, stable. Slack or business conditions, stable. Could only find part-time work. That was up a little. Well, that's a little hard to say. Who's this?
And inflation is coming down.
It looks like Loretta.
The Fed has to be forward-looking, and you don't want to keep rates at the current level given where inflation has come down from and where it's going in terms of the forecast. Yeah, there are risks on the upside to inflation, and you pointed out some of them, including oil prices given the conflict in the Middle East, which may be escalating, and that's something to keep an eye on. But you have to sort of make your best policy looking at where you think things are going, and maybe you'll have to course correct in the future if things turn out differently than where you're projecting. But right now, it makes sense for the Fed to keep looking at the data it gets up until that next meeting, and then move rates down as it said it was going to do at the last meeting. It's starting a new phase to bring them towards neutral. We don't know exactly where neutral is. We don't know when the stopping point will be. But with the moderation going on in the economy that we've seen so far, which is expected to continue, and where inflation is expected to go down, it makes sense to be bringing rates down at a moderate pace. I think this report would not necessarily support doing another 50, but it is consistent with moving rates down another 25, and then maybe they'll pause for a meeting or two.
Yeah, that would be my guess, Loretta. If you're looking at inflation, not necessarily completely where you want it, but coming down significantly when you're looking at the jobs market being stronger than you even anticipated last month, because we not only had stronger than expected numbers for the most recent read, they raised, they revised the numbers upward for the month before. Wouldn't the prudent thing to be look around and wait and see, especially when you just came off 50 basis points when that was the most anybody had been anticipating?
I mean, you could do that. And again, they're going to have that meeting, the discussion around the table. I think it would be actually a signal of sort of stop and go policy, which I don't think would be very helpful. Look, they started in this phase. There's a lot of evidence that suggests that things are moderating. I mean, not every report that's come out has shown that everybody's hiring, right? If you look at sort of the ISM surveys and the businesses that they talked to in that survey, a lot of them said, hey, we're being, prudent about our labor force now. We can hire people. If you look at the quits rate, people aren't quitting their jobs as quickly as they were before because they feel that it's harder to get a job if they were to quit to move into a new job. So there's moderation going on in the labor market, which we want. We want sustainable labor markets. We don't want things to be overly tight, and we certainly don't want people to be losing their jobs because the Fed is too tight. So that's kind of where the Fed has to look at. It's basically balancing risk. And, in the past, you could say they had the luxury of only having to worry about inflation. That wasn't really a luxury, but you know what I mean? They had to focus on inflation.
Sure.
Now they have to look at both parts. And that's what makes this more difficult, right? The decisions are going to be difficult going forward, but they've always been keeping both parts of the mandate in view. It's kind of like if you have a panorama shot, right? You may focus on one part of the mountain, but you still want to have the valley in the panoramic shot. They always have both parts of the mandate in mind.
Loretta, thank you. Former Cleveland Fed President Loretta Mester. It's great to have you here. Squawk Wax will be right back.
Wow. Okay, so just a heads up, the standard deviation on this, which is just crazy. Okay, 254, and I go into the median here, minus 150, 104. 104 divided by the standard deviation of 27.8, 3.7 sigma miss. This is like a Robin Hood moment. 3.7 sigma miss. This is like Vlad. This is like or we'll just say Robin Hood. Jan 2021. That's crazy. This is either really bullish or really. I think this right here, what I'm gonna put up, this about epitomizes the feeling right now. I go, what the F is the point of estimates on data? Every single quote unquote expert estimate was missed. And when experts are right on data, the data gets revised. 3.7 sigma miss. This is like Robin Hood, Jan 2021. This is either really bullish or really rigged. I lean towards bullish. Look at that. This is crazy. Wow. I mean, there's no way to say it's bad. There's no way to be bearish on it. And I think markets are responding appropriately to it. This is quite good. Here's Tesla up 199. You got Apple up 99. Now Microsoft up a bit. I want to see how broadly things are moving. I know Spirit Airlines getting smoked, but that's because of bankruptcy potential. You got Peloton, JD. Oh, back to the Chinese trade. Oh no. The triple Qs on triple leveraged. ARM Holdings 142. Restoration Hardware is up on this. Robinhood's up on this, a couple percent. Redfin's up on this a little bit. To the downside, you have Zim Integrated Shipping. Oh, Rivian. Did they report some news? Zim probably on the port strike. They ran on that. And then you have, Spirit Airlines down 33%. My goodness. Let's go find out what happened to Zim. What's interesting is also, like, what does this mean for small caps, right? Like, are small caps going to get lower rate cuts than expected? It's actually really interesting. Yeah, no, Zim is just, I was going to look at Rivian. That's what I was going to do. This is crazy. let's watch Bitcoin for a sec. Oh, there we go. Bitcoin's finally moving. Okay. So Rivian cut forecast, reaffirming annual delivery outlook. Deliver 10,000 vehicles, but the annual production was cut to 48,000 versus 57,000. This is some crazy freaking data. Let me look at this. Let's see what the historical precedent of this. Jobs reports. Okay. Employment persons, monthly level. I'm gonna go to change monthly. Yeah, that's fine. All right. I'm just very curious to see where we've seen these numbers. So you can look with me. Join me. And these are some insane numbers. Employment level. Why does that say September? Thousands of persons. Oh, well, I want to know the change. Okay. Change in thousands of persons on a monthly basis. There we go. Okay, they used 430 here. Isn't that the household figure? Hold on. That's the seasonally adjusted. Yeah, that's the household figure. Oh, interesting. Oh, yeah. Okay, I'm on the household chart. Okay, that's fine. I prefer the household chart anyway. That's insane. Look at the volatility here, though. So I want to now find a historical precedent on this. Well, I want to just sort of rule out these recessionary periods, really. Oh, wow. Oh, that's quite interesting. Look at what happened right before the recession of 2008. You literally went negative 223, positive 562, negative 298, positive 649, negative 322. I mean, that's very interesting. How does that compare to now? Negative, nearly positive, negative, positive, negative, positive, positive, positive. Oh, you got a nice little positive trend right here. But yeah, I don't know that that's too useful, honestly. It doesn't really tell us anything. Like, it doesn't guarantee, like, having a big report like that doesn't guarantee that you don't have a recession. That's interesting. I guess it does tell us that, you know, because you could have these giant beats right before a recession. Now, that's interesting. Let me look at 2019. I need to get rid of COVID. Yeah, right before COVID, you had some giant beats as well, especially in September. Is this always a September thing? Are there September negative Septembers? Not really. You get negative Octobers and Novembers. There's a September 05. Obviously in recession. How about... Look at that. Right before the 81 recession began, you had a giant jobs report. Okay. That's crazy volatility, huh? It's just yeah, I think it's a crapshoot, honestly. Like, this is the data that markets are reacting to, is this stuff. It's like, how is that useful at all? I think what's more important, actually, if I change this to semi-annual, I could get a trend. That's more useful. Oh, that's much better. I really have to get COVID out of there. Actually, yeah, semi-annual. Am I okay with that? Let me go with quarterly here. Then let's add the annual line over it. Okay. And now I'm going to get COVID out of there. Because then it's going to be like having a moving average here, right? Okay, get rid of COVID. And then to better analyze this, let's take it to the iPad. Because that'll make this a little easier. Okay. So okay. All right. So now let's see here. Yeah, that's good. Okay. So every time you went into a recession, starting, what is this? Here in the 50s, right? Red line down. So let's mark every time you went into a recession. Let me see. Can I put like a stamp here or something like that? Like an arrow or... Yeah, here we go. Okay. Every time you went into a recession, the red annual line fell here. Well, you know what? Let's actually go with like a circle, because then I can do this a little better. So let's draw a circle. You crossed over. Let's do a little smaller. There we go. No fill. Great. There we go. Okay. So here you crossed over the 0 line on the red. Here you crossed over the 0 line, you had a recession. Here you crossed over 0, you had a recession. Here, actually, what was this? 70s, you did not. That's interesting. You just had a decline. So that one's a little unique. Okay. Then here, you had recession. Recession. No, I mean, you had recession, but no crossover to 0. And this is all on the red line of the households figure. Okay, recession, recession, and then obviously COVID. So I have to look at it. Now I'm going to look at the blue line, and then we'll look at where we sit today. Now, in terms of the blue line, which we have, I think, at quarterly. Yeah, the blue line is quarterly. So let's write this down. Green circle, households goes negative on annual trend. Recession. Orange circle is households declines but does not go negative and still recession. Okay. And then you have the blue line. Is the blue line predictive, which is quarterly average of household jobs? Okay, well, let's see. Let's see here. Here, you went negative here. This is, I mean, huge spike right here, though. Negative here. Huge spike right here before it. I don't think this is as useful. Negative, huge spike, then negative in the recession. Yeah, this is just so volatile. It's not very useful. I'm gonna write that down. So quarterly seems too volatile. So imagine monthly. I mean, monthly is just a poop show. Okay. So, and where do we sit now? Well, now we sit... That's not very useful either to tell. That's your change in quarterly right now. And your change, which, you know, briefly went positive here in Q1, slightly positive Q2, Q3, And then the annual changeover obviously went negative for COVID, but and you're on a declining trend, but it doesn't look like, I mean, the magnitude of that, it just makes you wonder, is that a normalization or what? How far back does that go? Why does that stop at Q3? It doesn't actually give me the annual up to, look at that. The annual only goes through 2023. So I'm actually not going to get that new update yet. Okay, but I could do it myself. I could plot it because I could go the annual change in households from the BLS report. So BLS. So let's do it ourselves. Employment situation, household data. Here we go. So year over year employed. Yeah, look at that. So the year over year employed number is up, well, 364,000? No, 334,000. 334,000, and that's on the seasonally adjusted, which I think this is all seasonally adjusted. Let me make sure. Yes, seasonally adjusted. So this number, 334,000. I have to figure out how to put that in here. 334,000. Well, that would be a very low number. This chart will plummet because where's 300 and see, it'd be less than that number right there. If I'm right about how we're analyzing this, which I think I am, because we're using the same table here. See, because look, all I'm taking is this employed and this employed. And the difference is only 334,000. So this red line is going to plummet. Now that's interesting. Let me see here. Okay. Let's pull that up. Change this. Okay. So this red line will probably end up, that right here, that dot is 465. We need about 300. So slightly under that and slightly over that, because that's 264. So between those two is where the red line will go for the year so far. But then again, no, because it is September to September. So it is a full year. So the approximate current estimate would put you right about there. That's reasonable, right? That would be the 334K annual household gain, which would look a lot like, I mean, I hate to say it, but it would look a lot like that, which looks a lot like what we've seen in these other cases. I mean, where it plummets pretty freaking low. So I don't know that with how volatile this monthly data is on a like a big level, you could actually say that, you know, one jobs report said, oh, good, we're not going into a recession. Because if that were true, we would not have, like, let's mark all the times we would not have gone into a recession if that were true, that the labor market actually gave us a heads up. So Q4 2007. So right here, oh, let me go to the monthly. Okay, monthly. Okay. 2007. Yeah, right before, in November of 2007. Let's write that down. Nov 2007, positive 649K jobs. October 2007, negative 298K. And then the month before that, Sept 2007, 562K. Positive. So that didn't stop you from a recession. Okay, let's try 01. So 01, literally the month the recession started. Oh, that's crazy. March 2001. The month the recession began, employment spiked up 171K in households. With 3 months, 3 months earlier, 292K. Not very predictive. Okay, let's look at 90. 90 recession started in July, and May was 299. July start to recession. May read was 299K. And then here, the recession in 08 started in technically December of 07. Recession began December 2007. So recession began a couple months later. So what I'm finding here is of the past, I'm going to write down sort of a little conclusion here. Of the past 3 recessions outside of COVID, household jobs spiked 171 to 649K to 649K range, in a single monthly report, and we still hit recession. I would suspect, my guess is, markets rallied on these reports back then as well, yet recession still came. That's very interesting. Yeah, and remember, jobs is a lagging indicator. Jobs reports, right? Jobs. Anyway, and that's very interesting. Very, very interesting. So it says 314K annual gain. Yeah. Yeah. It's 430 this month. 300. Is it 314? What did I say? 340? Let me see. Employed. Oh, yeah, you're right. 314. I don't know what I think I may have said 340 or something like that. Oh, I said 334. Oh, okay, thank you. Yeah, 314,000 annual household gain. Very interesting. All right. Somebody says shop. How do I get on your stocks trading so I can join, says Luke. Boy, that sounds like an ad. It's not. MeetKevin.com and get the Stocks and Psychology of Money group. Hey, if you want to see what kind of positioning I take after today's jobs report, you'll be the first to know in the Stocks and Psychology of Money group. Check it out, linked down below at meetkevin.com, and you get all my buy-sell alerts when I see trends. Obviously, no guarantees, but I do my best. So Shop just let go of 8% of its workforce, did they? Shopify layoff. I didn't hear that. Where'd you hear that? Oh, look at that. Shop. Oops. Shopify. No, I don't see that. But yeah, very interesting. Something's not adding up. Seems like 07, 08 when companies were trying to hide bad loans. Yeah, no kidding. I remember when not being able to go to recess was a punishment. This report is fixed for the election. That's funny. Thank you again for that clarification on 314. Very interesting. Winston Churchill. When the economy is booming, you could feel it in the air. This isn't it. I love the name. Okay. So, Kevin, show us your mug collection. Got a lot of mugs. I had to put them, had to spread them out between like 3 different kitchens because there's so many of them. I also know many unemployed folks. I spoke to someone yesterday who has submitted his resume 100 times. Very few nibbles. Very interesting. Summer update? Summer's great. You know, she's still got her little G-tube, but boy, she's pretty good. I'll have to maybe if she's awake here soon, we'll bring her in. I think it'd be cool to bring Summer in. We will fight them on the beaches and in the stock market. That's funny. Let's see here. Feels like 2009. I personally think the Fed learned from last time. Yeah, it's possible. That's possible. Airlines are up? Oh, I believe that. Well, I think almost everything will go up for that, except for Spirit. But also the bankruptcy of Spirit could lead to more market share for the other airlines. Oh yeah, all the airlines are up like 5. Oh, they did move on these jobs reports too. Yeah, Nick T just sort of gave like an average read. Let's see here. Let's see what his latest is. Okay, Nick T. Three-month average payroll growth for August was revised up to 140K from 116 payroll. Yeah, this is 3-month average non-farm payroll growth is this. I wonder if we can get a full chart going all the way back on this. 3-month average employment growth. Let's see if I can get that. 3-month moving average. Yeah, here we go. Wage growth? No. Oh, that's unfortunate. Wage growth. No, I need employment. Yeah, I guess that would be the quarterly. Yeah, that would just be quarterly. And then growth would be the change. Yeah, that's just the quarterly read. Oh, yeah, okay, that's what we already mapped out. Interesting. Which is this, right? And this is where you see, you know, I mean, the 3-month did decline in 67 here without a recession. That's kind of a large decline over here. It's very volatile, though, even on the 3-month. I mean, look at this, mid-80s right here. 3-month decline substantially. It's really that annual that seems to matter. Let's go to post-COVID. Yeah, I mean, again, you know, people just wonder, is it a normalization or what is it? Fascinating. Yeah. Okay. So let's see here how markets are responding. Looks to me like the Qs had a beautiful, delicious rally, although they're giving up a little bit going into the open. Tesla's up 2%, Enphase is up 2%. Interesting that your interest rate sensitives are moving up on that. That is very interesting. And then how's BTC moving? Bitcoin moving back down. Oh, interesting. Okay, communist country China is more pro-growth than the capitalist country America. Oh no. Heard someone from Dell is selling like 1.2 billion in stock. Is it true? What would be the reason? Well, I mean, I don't know. Maybe because the stock's down like 50%. Who knows? I think we're in the Matrix. AI is controlling our reality. No recession. The Fed's cutting. That's funny. Kevin, what if the U.S. fails to go into recession? Yeah, I mean, it's entirely possible. I mean, that I actually think that's a good thing if the market doesn't go, if the economy doesn't go into recession, because I think recession is extremely painful and it would be very bad. Like, I'd rather, focus on growth startups in not a recession than in a recession. You grow startups in a recession, it's substantially harder and everything takes years longer. Family Adventure says, Kevin, China just stimulated and the U.S. just had a good jobs report. All of that is inflationary. Yeah, I disagree with that. I think China's experiencing substantial deflation, and their stimulus won't be enough to actually get them to inflation. I think that's how markets move, though. I think markets are under that impression that, oh yeah, this is definitely going to create inflation. I don't see that. I don't see it. I'm a big fan of watching what companies are saying and what they're doing. That's why I just really like earnings. We go through them every day in the Course Member live streams. Just earnings. And, it could be on a downside too. Like one of the ones that, I've been less enthused by has been Celsius. This crazy run up on Celsius. We did quite a few analyses on this, and I'm like, I can't touch this stock. I think it's a competitive nightmare, and you're facing a lack of pricing power. You're facing a lot of lack of pricing power in much of, quite frankly, the industry right now, but specifically in sports drinks. So sometimes good research is helping you understand what not to buy. So. Okay, so I'm actually surprised that you're not getting more of a rally on Bitcoin here. Again, I think maybe that's because of Trump, but these are such good job numbers. How much has the market already priced in this enthusiasm? I don't know. I guess we'll see based on how the day trades. Something that I do find very interesting is if you zoom out on the week chart, on the Qs, so you're getting close to that all-time high figure. You're slowly closing in on it. We're at 187 now. That all-time was 502. We do have a line at 493 as well. So let's see what happens today. And then Spirit. Yikes. Gosh, what a bleed out, huh? Not much actual trading there in the pre-market. Q's trading a lot. Well, it'll be really interesting. Well, we're 1 minute from the bell, so let's see what it gradually, then suddenly. Yeah, no kidding. No kidding. Kevin, the Fed site shows 0.57 for the SOM rule. Oh, maybe it hasn't updated yet. SOM rule. Well, this shows 0.5 updated today. I'm telling you, it's about to undo the SOM rule. It was crazy. It's literally about to undo it. All the bad indicators are getting undone.
Although the bears still point out Waymo's operating in the real world. Tesla's doing this on a movie studio lot.
I'm a believer. Look, we sold some Alpha for the first time. For the travel truck, we're up to you. But I just think this Waymo is much special, more special than we realize.
Let's get the opening bell here in the CNBC Real-Time Exchange with the big board. It is the American Cancer Society marking Breast Cancer Awareness Month. At the NASDAQ celebrating an IPO, it is Bing X, a courier services provider in China.
I wonder whether Tepper's just standing there and buying that opening. Tepper being the legendary buy everything guy. I mean, he's been so right, so I just pointed out.
He has been dead right when it comes to China. And that morning, it was a seminal sort of discussion with him the Squawk Box crew had.
Somebody says, on StockHack, how can you provide wealth planning without offering tax advice? Well, you can, right? A financial advisor can provide tax insights to the extent that they're financial advice. And then you could take that information and either verify it with your own CPA or hire a CPA that we work with. We work with a CPA every day. I had a CPA on the radio. I'm like, 2 seconds away from a CPA who's been doing this for decades. So, yeah, good question about StockHack. But you have to remember that, like, a financial advisor understands taxes as well. And you can take tax ideas and then take them to a CPA. Like, for example, if I suggest, hey, you've got this real estate, you want to get out of investing in real estate, you don't want to deal with tenants and toilets anymore, how can we structure maybe a 1031 exchange to minimize your tax liability while also minimizing the effort that you have to put out dealing with tenants and toilets? That is an example of, a financial advisor talking taxes. Now, obviously, the structure of that, you have to coordinate with your CPA on because they have your tax basis and all of that. So it's a good question, but yeah, I mean, it's kind of like a real estate agent. A real estate agent writes contracts, but they're not a lawyer. That doesn't mean they know nothing about law or how contracts work. Well, I mean, I guess it depends on the real estate agent you hire, but I always had a passion for studying law because I work contracts every single day with property management or, other real estate agents, negotiations, whatever. Anyway, so very interesting. You're getting a sell down on the Qs at the open. I'm not sure if this is a profit take or if this is, just a little bit of an overdone rally. You did move from about 40 basis points up to about 1.07 basis points up, which is very interesting. Is StockHack good for someone near retirement? Well, you could always give us a call. It's totally free. Sign up for a call at stockhack.com and see if it's right for you. What a lot of people do is they call in and go, hey, here's my situation. Can you help us? And then what happens is the team calls me or they radio me or I talk to them in the office and they're like, hey, we've got somebody who's got this situation. You got ideas for them? And then it's like, no, we can't help them. Or, oh, yeah, plenty of things we can do to help them. So that's one of the benefits of sort of a free call over at StockHack. We're purposely, look at the airlines rally like crazy. Yeah, those are nice pops on the rallies. So as Spirit Airlines is going bankrupt, the airlines are popping. Well, because they're going to get market share, right? So nice move there on the airlines. How's American Airlines doing? Like zoom out on American? Yeah, I mean, we might have to do some analysis on the airlines here in the Course Member Live, but that's very interesting. But yeah, that's a very interesting. Oh wow, look at that! You kind of just keep running here. AAL. How about Delta? Let's get DAL in here. Delta's only up 3%. It's American and JetBlue that are running on this. Oh, how about Love Southwest? Also only about 3. Interesting. Okay, so the Qs continue to rotate down here. This is such a bizarre environment. Rocket Lab up. Disney's up 75 basis points. Tesla's up 2.5. Oh, look at that. Rejected at the 247.69. Very, 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 very interesting. Let's see here. Let's see here. Okay. Oops. There we go. So, Kuzi says, can you confirm you are personally involved with the members who sign up at StockHack, not just somebody using your name? Yeah, this is actually a very reasonable. Oh, look at Tesla run right there. This is a reasonable question because there are a lot of people on YouTube. I won't mention any names. Some of them are lawyers, some of them are other financial commenters or whatever. And what they'll do is they kind of like license out their name. And then you get like total randos, which is fine. Like, I'm not saying that's a bad business model. It's a business model. But that's the opposite of what we do. I think yesterday I spent 3 hours, with the team just chatting about strategies for different folks. Now, I do a lot of things in the day. I mean, I'm up at 3 a.m., right? So for me, I might do like 3 hours of YouTube in the morning, or 4 or 5 hours, it depends. Maybe 3 hours of working with the finance folks. And then a lot of work goes into House Hack. And so usually, mostly because we've got some big things coming for House Hack, which no recession is great for House Hack. So it's all a balance. House Hack is freaking kicking butt. So really, really cool. But yes, Kuzi, I'm involved. So why did bond yields go up? Well, mostly because you saw we talked about this already when we covered the jobs report. You saw a higher month-over-month wage gain. And this insane, what was it, 3.7 sigma miss on the jobs report, I should say beat rather, on the jobs report. Pretty crazy. Pretty crazy. So, question is, when will bullish crypto Kevin turn up? Oh, who knows? Let's see how things go between this next earnings set. I think this next earnings set is really, really important. So let's see here. Palantir nearly touched 40. I saw that in the pre-market. It was right in front of 40 here. Let me see. Palantir. Yeah, interesting. It's kind of dropping right now too. Very interesting. For stock hack, so we can take international clients as long as they're less than a certain percentage of the total clients that we have. So if you're interested in it from a different country, just email us at staff@stockhack.com. Make sure it's the staff one, staff@stockhack.com. So somebody says the job numbers are fake. So okay. Kevin, you're a master of motivation. Oh, well, thank you for that. Yeah. There's always something going on. But it's fun. I really enjoy it. Apple selling, is it really? Yeah, a Palantir drop in here is very interesting because this is supposed to be really bullish, but BTC is having trouble breaking out. The Qs they're up 1%. It's a good day. You could hang up your hat for the Qs. Tesla's rising and Apple's falling. It's just bizarre, eh? So, rally till election. It seems that way, doesn't it? It seems like you're getting rally into the election. Because usually you get rally after the election. So, very, very interesting. No, Kuzi, I don't think there's a compliance issue there. Just email staff@mekevin.com. Staff@stockhack.com. But you know what I'll do is I'll write that down. But I don't see that being an issue. As long as your primary residence is in the United States. Yeah. I'll find out about that. Nice rally on Tesla. That one keeps going. Enphase gave up again. Man, what is up with Enphase? Crazy. Okay. Very interesting. Wingstop's up again. Crazy. Okay. So, yeah, Palantir keeps trying too. Let me see. I don't think we have any other data today. Data. Yield curve as well, and world interest rate probability. We are at 6.3% chance now of a 50, which is basically no chance. So you're gonna decelerate to 25. 8.6 on the 10-2 inversion, uninversion rather. And yields are kooky right now. The 2-year's up 14.5. The 10 is up 9.6. So this I have a very, very hard time comprehending this. And so forgive me. Maybe I'm just really dumb. And that's entirely possible. But help me understand this. Fed seeks lower rates to stabilize employment. Yet since Fed meeting, yields flat to up, not down. So effective rates not loosening, which means Fed is, market-wise, still tightening. Unless inflation is reigniting, this is broken. And at some point, will flip. Yields must plummet to avoid a recession. IMO. I totally believe it. But in today's jobs data, I mean, we already analyzed the jobs data, but oh well. So okay, so BTCs, Qs and BTC still going up. You had a little bit of red there, but now you're back on the up move. Let's see what other comments we have. Tesla moving up nicely. 250 is an obvious target. Yes, it is. I have a line there as well, but also this 247.69 one you have to sort of unshackle from. Kevin, you sound Canadian. Well, Lauren's half Canadian. They're faking it for Kamala. Oh. Okay, I'll handle that, Kuzi. Thanks for the heads up. I don't see that as a problem, but we'll verify first. So, do you think the increase from the dock workers' salaries and strike will increase prices for consumers? Not really. You know, it's one of the lingering kind of catch-up job negotiations, and it's over, I think it's 6 years. Tesla's trying to push up again. This blows my mind, this end-phase sell down. Look at that consolidation on end-phase. Crazy. No, see, walkie-talkies are usually something people use for really nearby communications. When you have to communicate over a longer distance, you call it a radio, or like an LTE radio. So it sort of just depends. So like I have a flight in a few hours, and I'll be in radio contact with my team, even though I'm out looking at house site properties. So surprise, surprise, you can do multiple things at once. Drill, baby, drill, says someone. Restaurants are struggling, yet they're high. I don't understand. That's what I don't understand either. I couldn't agree with you more. It seems weird. Restaurants are freaking out in earnings, yet supposedly hiring. That's a very interesting one. Speed dating. Koozie, yeah. Yeah, the 420 gets you into the 69. That sounds ridiculous. But it's true. Why is that's another weird thing, right? Why is IWM down? Like, if soft landing, you should have IWM up. IWM falling, but that may be because of the potential that you get fewer cuts, right? And then in a weird way, you have Tesla doing really well. Tesla, which is interest rate sensitive, doing great. It's about to hit 250. Fascinating. I think this is probably the bottom in bonds, because, like, how could you have better than this? I wonder what volatility has done in bonds. Like, this is such perfection right now. Let me see here. Yeah, bond volatility is definitely picking up. All right, so I'm gonna write that down. That's interesting. Perfection so far. Blowout jobs report on household, establishment, and seasonally adjusted, or I should say non-seasonally adjusted, right? Excellent JOLTS report. Excellent ISM report. You know, everything is like screaming good in that sense. In these latest reports, right? GDP, excellent. The concern. How do you balance that with the concerns? Well, maybe the concerns are wrong. So you have to balance that with balance this with earnings slowdown and like waning pricing power, right? Waning PP. The lagging nature of earnings, restaurant performance, construction, like net housing starts versus completions. The beige book, bearish beige book. And then you've got, you know, obviously lower end delinquencies and such. So when you put these together, you go, okay, so this week has been a week of pricing perfection. Does that mark a bottom in bonds? Let's see here. Trend on, go to like a, I don't know, TLT. Go to, oh wow, look at that. Broke through a trend right here. You are going to, you've got the 100-day moving average next. Yeah, that's the day chart. That's wild. So what if you adjust this? Let me see if this is a better fit. That might be a better fit. See, now you have a widening wedge here. Is that fit? Yeah, that kind of does fit. Now that you have another data point there. Look at that. It's not perfect. No, it's not perfect. It feels like it's a little bit more perfect. That's pretty good. The top's pretty good. That's the dropout. Interesting. Yeah, straight down. And it's really straight down since Fed Day. Look, Fed Day right here. Mark the peak. That's crazy. All right. Somebody donated. What is this? $4.99. I'm looking for an affordable wedge deal in LA County. Good luck. There's no such thing as an affordable wedge deal. There are great deals and there are bad deals. Affordable? I don't know about that. So let's see here. Keeping up appearances into the election. Oh, the Jade. All right, let's listen in. I want to see what the Doomers have for us this morning. Okay. Let's go. Nope, they're on commercial. Nope. Everybody's on commercial. Okay, fine then. All right, let's see what else we have here. Let's go see here. Bitcoin's still stable at this line. Palantir, nice run up. Look at that. It's actually doing really well intraday too. Q's not so much though. They don't really want to hold it. Let's see here. Okie dokie. I'm trying to see if the suits have anything new for us. We have yield curve flattens after payroll surprise. We saw that. SOM rule might be reliable to traders in this cycle. The slide in the SOM rule is a signal that the once flawless indicator might be less reliable than thought. Okay. So I don't understand why they have that title, but okay. Fell back to 0.5 after this morning's blowout job report. Historically, we haven't seen the indicator back down once it crossed the line. This cycle is unique. Oh, here we go. This cycle, it's different this time, folks. Okay. How long till Zim get the news that the strike has ended? Well, Zim went up on the news of the strike. So I think what you're getting is sort of a new, like a trade down, because it's, you know, what's it called? The strike is over. Okay. Let's see what we have here. Oh, yeah, here we go.
To get it under control. Right. 4 years ago, kids were being told no trick-or-treating for Halloween. We're in a very different place right now, and that is in no small part because of strong leadership and economic policies that have helped to fuel an unprecedented economic recovery.
And Secretary, as you know well, very strong report overall. If you were looking for some weakness, you would find it in the manufacturing sector, of course, shedding another 7,000 jobs. That was slightly better than estimate, but a contraction there nonetheless. And the downward revisions there were actually lower. So what is the administration doing to address what's going on in the manufacturing sector?
So here's the story of manufacturing. President Biden and Vice President Harris have been saying since day one, we believe we can make things in America again. We can open up factories that were shuttered in the last administration. I visited some of those, factories where people had to leave their community, leave their families to go find jobs elsewhere that are being opened up again. But it also takes some time to reverse the really decades of disinvestment in our manufacturing industries. Now, we're making historic investments now, and that's really showing up in the construction sector. And you got to build the manufacturing facilities before you can hire people into them. And so this is, even this jobs report, as great as it is not a declaration of victory. It's a declaration of progress. We are making significant progress, and we need to keep up that trend. We need to keep up that work. Manufacturing jobs have grown, but they're going to grow more as we keep investing in America.
Well, let's talk, of course, about the other piece of good news this morning, and that is that the 3-day strike at East Coast and Gulf Coast ports has ended. The contract extended through January 15th. I know that you were heavily involved in the negotiations. The New York Times reporting that you were in New Jersey yesterday, of course, meeting with the unions. Talk to us about how it happened in the end. What did you do? What did Secretary Buttigieg do? And what did Joe Biden do?
Look, this is another example of many in this administration of just how powerful and effective collective bargaining is. When workers have a voice at the table, when they have a union on the job, when they can come to the table, sit down with their employers and talk about what's good for them, what's good for their company. It's better for the economy. It's better for the nation. We've seen that from auto workers to airline flight attendants, from hospitality to healthcare, and now at the docks as well. And this was a situation where longshoremen who do difficult and often dangerous jobs worked through the pandemic, strapped the country on their backs, and have helped to fuel record profits. Shipping carriers have made tens of billions of dollars in profits over the last few years. Again, that's partly because the economy as a whole is strong.
Right.
So when the economy is strong, everybody benefits. And this is an example of how when workers have a voice, when...
All right, we're going to pull off this. It's just interesting to hear sort of the Labor Department. The reason I listen to this is because you can really see the White House coming through in this and standing for the unions, basically, which was expected that the Biden administration would, because the Democratic Party generally associates itself with pro-union and gets a lot of pro-union votes. So, not all, obviously, but a lot. So it's not a surprise to me that the strike ended. I do think the Maritime Association probably got some stimulus checks. I don't know how we could figure that out, but something that I think of. Let's see here. So, let's see here. Don't hate the player, hate the game. Yeah. Chop report is 100% political. Look at all the stocks be pushed down. What's going on? Just manipulation all around? I don't know. Guess we'll see. Wait till the revisions. Yeah, I mean. But even if you revise this down 30%, it's a banger. So. What's blowing my mind, though, is that you're having trouble keeping some of these numbers up. BTC can't get above 61.7. Look at the Qs. And you're just like tanking on the Qs. Average candle here, obviously. Disney falling off a bit. Tesla, look at that reject. 25 cents from 250. Nvidia's about to turn red. The best possible news is in. That's my potential takeaway here. How many weeks since the Fed meeting has been? Like 2.5? Huh. It's interesting. But this is a takeaway I have. The best possible news seems to be in. You have, think about this. Let's see here. We touched on this already a little bit, but it's worth kind of summarizing. Strong blowout jobs. Blowout jobs report. Blowout ADP jobs report. Great ISM report. And then strong JOLTS report. And so then this is either the start of the soft landing, or bonds just hit their bottom and stocks just hit their top. Stocks just hit their top. I think earnings will decide. So we'll see. Huh. Fascinating. Very, 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 very interesting. Okay, so typical volatility over here. I don't think we have any 7 o'clock news. If you want to see what we're doing in the course member live stream in terms of repositioning on this jobs report, or changes in allocations, where my head is, what my take is on hedge trades, long trades, all that, make sure you're part of the course member live stream. We are going to go live in about probably about 10 minutes here. I'm going to make another cup of coffee, and then we'll go live over there, probably about 7:10. Look forward to seeing you there. Remember, you pay once, you get lifetime access forever. The price does go up today, so at 11:59 p.m. So if you want to lock that price in forever, make sure you join today. If you have questions, email us at staff@meetkevin.com. You want to see any kind of changes I'm making with some of these multi-million-dollar trades, go check them out over at meetkevin.com. So that's what we got. Okay, so for now, let's see, what's this $19? Oh, that was the Zim thing. So thank you so much for being here, and let's go ahead and push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Well, there you have it, folks. Love y'all. We'll see y'all soon. Bye.